Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. If you like making money, this is the channel for you. Subscribe to the channel. Give me a thumb up for this content. Leave comments below if you guys have any comments on anything. This is an overall market update. I'm going to go over a couple of things. I'm going to first touch on how you would prop up a market. And then I'm going to go into some market updates, some housing, some real estate, just to show you kind of where we're at to get you that confidence to be investing during these little market pullback sell-offs. So here's an overall market update. I'm going to call this Prop Up 101. This is how you do it. So you're gonna want to hold interest rates down. And how would you hold interest rates down? Through QE, quantitative easing, and buying bonds. That's how you hold them down. And you would also do yield curve control. That's what they've been talking about recently. So really what you need to do is you need to hold interest rates down, which then props up bonds and stocks. That's how you keep them up, is you got to keep the interest rates down. Problem is, when you have inflation, and that comes from real estate, the interest rates are naturally wanting to go up. So they have to manipulate all of these things in order to prop up the bond market and prop up the stock market. So what they're going to try to do is they're going to have to keep commodities and inflation down somehow. And what they're going to do is they're going to control precious metals and try to keep them down. The operative word there is try, because I don't know if they're going to be successful at doing it. And essentially, if you can keep the precious metals down, especially gold, they essentially control all the pricing of all the commodities, because gold is the leader. And if you noticed, I'm pricing everything in relationship to gold, all the ratios. Gold is that indicator. And they're going to try to drive it down, drive it down, drive it down. And here's another question that I have for everyone. Why are premiums so high, and why do we have shortages developing in the physical markets? I know a lot of people, they're worried about the paper prices being down. But why do we have physical shortages? What the heck's going on there? And remember, the only thing they can control are those paper prices. Don't let them control you. Don't let them control you. Don't let those paper prices influence you and how you invest, because I'm going to show you a bunch of charts which all look bullish for commodities and inflation. So let's go into these charts. Here is the 10-year U.S. Treasury yield. And you can see that the yields have been going up. And the take on it that I have is when yields go up, you have inflation. Now, the only other time yields can go up like this is if you have a debt crisis. And I don't know if we have a debt crisis. We could. I mean, very well could. But history has shown that when yields go up, we have inflation. Inflation means that you have real negative yields. And then if you have real negative yields, the bond market's going to sell off, which means that the sell-off in bonds are going to increase yields. We can see that here in the 10-year, and we can see that here in the 30-year. And notice the 30-year, whenever you have like these attempts, a lot of them have always been like a gap down, all these gap downs. There's very few that are a bearish engulfing, like there's some here, right here, but we continue to go up. So when you look at some things, look for gaps, because gaps usually means that somebody sold it hard in the pre-market. And when you sell it hard in the pre-market, no one is in the markets when the markets are closed. So if you're going to manipulate these things, you do it all in the pre-market, and you get these big gaps. And I'll show you later on in gold and silver what that looks like. Here is the privately owned housing unit starts with the updated data of January. We have 1.58 million. We're continuing to move up into an expansionary phase of real estate. There's one thing I want to point out on this chart that I want to make everyone aware of it. Every time this housing starts is going up, the dark lines here are recessions. There's no recessions when this is moving to the upside, if you notice. We've come out of recessions, but they're all moving up. No recessions resulted from a move up outside of the dot-com bubble. All these recessions are from real estate going down. And we had this recession where they shut down the economy, and obviously the housing starts collapsed. And then we went right back up. So if we have increasing housing starts, I propose that it's a very, very low likelihood that you're going to see a blowout recession. Basically, looking at history, you'd say that there's an incredibly low probability of a entire blowout deflationary collapse, because you got to have housing starts go down. At least in history, that's been the case. At least in history, and this is just residential. Perhaps there's a collapse in commercial or some other area. But as long as residential real estate, which is a large portion of bank lending, at least history tells us that it's been inflationary, not deflationary. Next is the U.S. historical median home sales price. And I just want to show you from the bottom down here. This is kind of the bottom in here. This is 2009 to 2011. You can see it kind of bottomed out, and then we've been steadily higher. And notice just we've got the natural kind of yearly move higher. So we should see a decline first at some point. Oh, I guess you could say this quarter four 2019 is a little bit of a decline. And then we're going to probably move up. And I only went to 2020. The prices have been going up, and this annual home price appreciation is up now around 15%. So this data is a little bit old, but I just wanted to show you the overall trend in sales prices. GLD. All right, we got a gap down here. Where's the last time we actually saw a bearish engulfing? It was right here. That was the last time we saw a bearish engulfing. All these other ones have been gap downs. Gap down, gap down. We got a bearish engulfing here. This isn't too bad, but we got a gap down here. This could be, and I don't know if it is, I don't have all the answers here, but this could be one where they sold it off. There's a bunch of stop losses under here. It triggers all the stop losses. It's called a slingshot pattern. I think even John Howell, he's another YouTuber, he talks about a slingshot pattern. I've seen others talk about it in Forex trading, where it gets everybody stopped out, everyone goes short, and then it rockets higher. Is that going to be the case? I don't necessarily know, but we do have a little bit of a wick on the bottom, which means that the momentum is starting to come back to the upside. Is this gonna be a bottom? I don't know. We'll have to see the next trading week to see what the heck's going on. So I'm going to be patient here. Silver, same thing. We got this nice big gap down. I think this has been, someone came pre-market and gapped these things down, gap down, gap down. We've got a wick on the bottom, so the momentum's coming to the upside. Doesn't look like it's not totally lost here. We need gold to move to the upside, and I think silver's going to rocket higher eventually. Maybe not today, maybe not next week, eventually. And if the physical market keeps getting drained, well, the price is going to have to go higher. So it's just a matter of time at that point. SILJ, same thing. I like the wick on the bottom, though. That means momentum's coming to the upside. So that's a good thing. I don't like these gaps that they create. It means somebody who's in there messing around with stuff. At least that's my opinion. Now, uranium's still pulling back. We're still in pullback mode. I don't see a bottom yet. I don't see a reversal pattern yet. So just be patient. Be patient and let's wait. Oil, looks like oil's pulling back a little bit too. Again, be patient. I wouldn't necessarily be buying. I am looking for a bottoming pattern. I'm looking for like a bullish engulfing, something like this is a bullish engulfing there. So if it pulls back, you see this contraction here, you got a nice big bullish engulfing, which is a reversal pattern. I'd be a buyer on this day right here. And then you go up and then you kind of look. So holding, so another thing I wanted to touch on, holding is a position. Doing nothing is a position. I'm holding and not selling anything. If you need more cash to feel better, then do it. If you're struggling to hold on to your things, again, they want your shares. They being people who don't have your shares, or banks, institutions, they're trying to scare you out of your position. Markets in general like to scare people out of positions. My recommendation here is don't be scared. Don't let them have your positions if you can endure it. And don't let them beat you. Markets go up and down, and we are in volatile investments. So keep that in mind. These things are volatile. They go up and down. This is a market pullback. Nothing too crazy about it. Just be patient. Let's wait for this thing to bottom out. Then I'll add a little bit of money in. I would say I'm looking at uranium. I'm looking at silver a little bit, but mainly uranium, because uranium is, I think there's a lot of potential there. It's still incredibly cheap on a ratio basis. And I think there's a lot of opportunity there. So I'm looking at uranium. I'm looking at, I follow oil, but oil's still kind of high. And I'm looking at maybe some of these other ones, maybe smaller nickel, smaller copper, some of these companies too, trying to gauge where those might be at a bottom. I'm looking at rare earth metals. I'm just looking around, trying to see what I can find. Nickel. I'd like Nova Royalty to fall because I want to buy more of that as well. And it's being pretty resilient. I do think it's going to pull back. So be patient on these sectors. They will pull back, I think, still a little bit more. When everything starts to firm up, remember, look out the side windows, see what the other markets are doing as well. And I was showing that tech was coming under pressure, the S&P 500. They're still under pressure. Let these things dissipate that energy. We need that momentum to slow down, turn around, rotate, and head on up. Right now, everything is very correlated. It's all kind of together. This falls and this falls, and it kind of brings it all down together. At some point, there's going to be a breakage of that connection. I don't know exactly when that's going to happen. I don't know exactly what it's going to look like. I mean, I wish I knew all of these things that could tell everybody exactly how it's going to play out, but I don't think anyone has that foresight or that. I was going to say before knowledge. Trying to remember back in philosophy, I can't remember a priori or whatever knowledge, but I would say let's wait for this momentum to dissipate. Let's get the contraction where the buyers start equaling the sellers. Let's get some bullish engulfings, some hammers. Let's get some indication that the momentum is reversing and turning to the upside. And I haven't seen that yet in the chart. So be patient and wait for this bottom to happen whenever that's going to happen. So I think we're still going to pull back some more. If you guys like this content, subscribe to the channel, give me a thumbs up, and leave comments below. Thank you for listening. This is Finding Value.